Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London, and here's what's coming up on today's programme. Credit Suisse shares fell to an intraday record low after Reuters reported Switzerland's financial regulator is reviewing comments made by Chairman Axel Lehmann to Bloomberg in December, when he said outflows had stabilised. The Russian President Vladimir Putin is set to give his State of the Nation address this hour after cancelling last year's event. We will bring you the speech live from Moscow. Also on the show.
What I'm really pleased of 3 years later is a radical change in the profit generation by geography. The Middle East alone last year generated 1.8 billion of adjusted pre-tax profits. Our troubled market in Europe 3 years ago produced an adjusted pre-tax profit of $2 billion.
HSBC considers a special payout after pre-tax profit jumps 92% in the fourth quarter. The bank also cut its bonus pool. Shares in London drop. Let's check in on these markets. Firmly risk off this Tuesday morning as investors weigh up the prospects of further rate hikes from these central banks. Goldman Sachs making calls on both the ECB and the Fed. A further 75 basis points for the Fed. That is call from Jan Hatzius. When it comes to the ECB, the team at Goldman Sachs expect another 250 basis points to get to a terminal rate at 3.5%. The data coming through as well, it's a very mixed picture that we've seen from France and Germany. The manufacturing sectors for both of those nations in contractionary territory. Services, though, performing quite strongly. And here's the euro area Feb print then for services PMI, rising to 53. The forecasts of 51. So firmly in expansionary territory in terms of euro area services for the month of February. Let's get back to a key corporate story for us today then. Credit Suisse shares have slumped to an intraday record low. That's after Reuters reported that Switzerland's financial regulator is reviewing comments that Credit Suisse's chairman Axel Lehmann made about outflows in an interview with Bloomberg in December. Here's what he had to say.
Putin thought Ukraine was weak and the West was divided. As you know, Mr. President, I said to you in the beginning, he's counting on us not sticking together. He was counting on the inability to keep NATO united. He was counting on us not to be able to bring in others.
Obviously, that was the US President Joe Biden, not the chairman of Credit Suisse. We'll bring you the correct soundbite from the Credit Suisse chairman, where he talked to Francine Lacqua about outflows at the bank having stabilised. It is an important story, and the stock is taking a major hit. Credit Suisse and the regulator, by the way, declining to comment. We're going to bring you the details. Let's see if we can bring you that important soundbite. This was the chairman of Credit Suisse speaking to Francine Lacqua of Bloomberg back in December about outflows. Listen in.
The outflows basically have stopped. What we saw is 2-3 weeks in October, boom. And since then, flattening out, they have stopped. It's gradually coming back, in particular in Switzerland.
Now, both the regulators in Switzerland and Credit Suisse themselves have declined to comment. But this is a Reuters report that specific comment from the chairman of Credit Suisse to Francine Lacqua of Bloomberg back in December is now being probed by the Swiss regulators. Again, this is Reuters reporting. We will keep across this story for you as the stock takes a major hit. Let's get back to the geopolitics of the moment then. President Putin is giving his annual speech to the Russian Federal Assembly today. We are going to turn to the US and Ukraine first. President Biden pledging more military aid to help Ukraine fight back against Moscow. The Defense Department saying a $460 million package will include artillery and radar system. While meeting President Zelensky on an unannounced visit to Kyiv, Biden also promised further sanctions on people and companies assisting the Russian war effort. Joining us now to discuss this is our Warsaw Bureau Chief, Piotr Skolimowski. Piotr, what is the significance of Biden's visit to Warsaw today? The speech that he's expected to give, what are we going to be listening out for?
Indeed, it's going to be a major speech. Biden is coming back to Warsaw after being here in March following the outbreak of the war. And obviously what he is expected to say, or what Poles are expecting to hear from him, is essentially two things. One is that the US is here for the long haul, so that it's going to provide support for Poland and for its other NATO allies. But also, and that's probably what Biden is going to also say, kind of echoing what he told Zelensky, is that the West is united. I mean, the expectation was the war will split the West. Instead, the NATO seems to be united, and that's the message that Biden is going to send. And it's important because Poland, first of all, is an important ally, but also it's became the hub for the delivery of various weapons. About 70% of all the weapons that are going through to Ukraine from NATO allies are coming through Poland. So it's an important hub. It's also sending its own weapons, but it's also in a vulnerable geopolitical place generally. So it expects some reassurances, and that's something that we're going to listen in for.
OK, Bloomberg's Piotr Skolimowski in Poland. Thank you for previewing that speech. Of course, Joe Biden, the US president, expecting later today. For now, though, we cross over to Moscow, where the Russian president, Vladimir Putin, is addressing both houses of parliament, plus military commanders and soldiers. You can listen in. We will listen in now to the Russian president.
Our historical land to provide security and safety of our country, and to get rid of the danger from the neo-Nazi regime that established itself after the coup d'etat in 2014. We took the decision to start the special military operation step by step. Consistently, we're going to solve the problems that we're facing. Starting as of 2014, Donbass defended its right to live in its own country and speak its own language. They fought. They did not surrender in conditions of blockade and continuous shellings from the Kiev regime. And they hoped and they believed that Russia will come and help them. In the meantime, and you know that very well, we did absolutely everything we could, I reiterate, to solve this problem by peaceful means. And patiently, we took part in negotiations to get out of this very difficult conflict. But behind our backs, a completely different scenario was prepared. Western rulers and the strife for peace in Donbass became clear today. It was just blatant lies. They continued to close the eyes to political killings, reprisals, and torturing people of faith, and promoted Ukrainian neo-Nazis to continue their illegal fight in the Donbass. And then they set up nationalistic battalions, provided them with weapons. I would like to mention, particularly before the start of the special military operations, Kiev started negotiating to receive heavy weapons and other military capabilities, including aircraft. They also tried to get hold of nuclear weapons. The US and NATO developed their military bases, secret bio-laboratories. They were preparing to use the theater of the future operations, and the Kiev regime, the enslaved Ukraine, was prepared for a big war. Today, they accepted publicly. Without any shame. They're very proud of it. The Norman format and Munich agreement is all a joke. And when in Donbass blood was shed, and Russia very genuinely wanted to save lives, they played against it and using poker language, cards that were marked in Iraq, Yugoslavia, Libya, Syria. They will never be able to whitewash themselves because the decency, the legal actions, this is not for them. They are so used to spit at the whole world. They also treat the people of their countries cynically by telling them lies, by telling them fables about looking for peace and adhering to UN Security Council decisions. And it was all unprincipled lies. We stand by our position that in a modern world there should not be a division between civilized countries or the so-called civilized countries and the others. We have to have an honest partnership without any aggressive notion, and we are open to constructive dialogue with the West. And we reiterated that Europe and the whole world requires undivided security. And for many years, we suggested to our partners to work on the implementation of this idea. And every single time we get a very unclear reaction and actions, the enlargement of NATO towards our borders, as well as setting up missile defense. And they decided to create the so-called umbrella of theater missile defense around our borders. And once again, I would like to reiterate, and you know it very well, not a single country in the world has so many military bases as the United States of America. There are hundreds of them. I reiterate, there are hundreds of these military bases all over the world. The whole planet is dotted with these military bases, and we witnessed how they left fundamental agreements, including the missiles of low and medium range. And they left all the peaceful agreements that were called to support peace and safety. And in December 2021, we officially sent the drafts of agreements on guarantees of security. It was a principal position on us. And what did we get? A direct refusal. And then it became absolutely clear that they have aggressive plans and they're not going to stop. They're going to implement these aggressive plans, and the threat increased by the day. In 2022, everything was ready to start the bloody illegal operation in Donbass. In 2014, artillery, tanks, aircraft. We remember those pictures when Donetsk was bombed and from air, and not only in Donetsk and other cities. 2015, again, they tried a direct attack on Donbass with the blockade, terror, and shellings of civilians. This all went against the appropriate resolutions and documents adopted by UN Security Council. Everyone turned a blind eye. And once again, I repeat, they are to blame for unleashing the war, and we are doing our best, our utmost, to stop the war.
Те, кто планировали новую атаку на Донецк, на Донбасс, на Луганск, четко понимали, что
that started the new attack at Donbass, Lugansk, and Donetsk knew full well that the next strike would be at the Crimea and Sevastopol. We knew that, we understood that well, and currently in Kiev, they are speaking openly about it. They've opened their cards. We knew that very well anyway. We are defending people's life. We're defending our house, our home, and the West is aiming for unlimited power. They spent millions of dollars supporting the Kyiv regime and aiding and abetting them. The OECD is spending for helping the poorest countries in the world for 2020 about $6 billion. That's clear, isn't it? 150 billion for the war, and for the poorest countries only 60. And the requirements are very clear. These countries have to obey. And all those talks about sustainable development, ecology, and fighting poverty, where did all of that go? Where did it go? And the money for the war, the flow of it does not decrease. They are supporting the coups in other countries around the world. They don't spare any expense for that. In Munich, there were constant allegations against Russia, and there is a picture that that was done purely for everyone to forget what the so-called West has done over the last decades. It was them who let the genie out of the bottle, and millions of regions were plunged into chaos. Because of
OK, we're going to leave this speech right now. The Russian President, of course, Vladimir Putin, with his State of the Nation address, his State of the Nation speech. The Russian broadcasters are slotted in about 1 hour for this. It could go longer than that. We may or may not dip back into it. Of course, Vladimir Putin saying that Russia will continue its military operations in Ukraine. Let's bring in Bloomberg's Mark Champion, who knows this part of the world very well indeed. Mark, just your initial first thoughts on the back of what we've been hearing from the Russian president.
Well, in one sense, it's what we've been hearing for a very long time. And I think there are a couple of things to take away from it. The first is that he is very much setting up the war in Ukraine as for Russians, not as a war with Ukraine, but as a war with the West. You know, what began as a special military operation, almost a policing operation, it was just to settle a sort of local problem. He is now setting as an existential war against our house, he called it, our home, in order to engage Russians more with the war itself. And I think the second message you got in this first part of the speech was to the global south, to the non-West, where he was saying, look, the so-called West, as he said, they have this long, decades-long pattern of militarism, and they are now spending $150 billion on a war, and they're spending just $60 billion on you. So all of their rhetoric about inclusion, equality, aid, it's all nonsense. They're all about war. So those two messages, really, one for Russians to engage them in the war, and the other to the global south to say, the West are not your friends, we are with you.
Is he succeeding with the domestic audience? Is he succeeding in winning over support? What do we know about how much support there is domestically in Russia?
Well, I mean, the important thing is that there is almost no opposition. So whatever success he's having in persuading Russians of, you know, exactly what he's saying, it's certainly been enough. He has control, full control over the media, over the, you know, the non-social media, the non-sort of anything that is broadcast, anything that is written, he has full control. And there's really very little sign of opposition. There are signs that, you know, that the support for the war is soft, especially when it comes to the mobilizations. There was a lot of concern around the first mobilization, but he managed to do it. He got 300,000 people mobilized. If he has to do it again, these are the kinds of things he needs to say.
It's pretty remarkable, given the hit to the economy, given the fact that hundreds of thousands of Russian troops and those who have been mobilized are now being killed or injured. It's remarkable that he's not facing more of a backlash, at least on one level.
Yes. You know, there are two possibilities here. One is that it's early days. It takes time for the sort of full knowledge and realization of A, the level of casualties, B, the fact that the war is being lost. And if that, you know, if that is a narrative that it really takes hold, then he, you know, that support may disappear. But, you know, in the meantime, the economy is not in worse shape than it was in recent memory, you know, in the 1990s. And so, you know, for Russians, they are able to endure a lot that perhaps in the West.
Do we expect him to remark on Biden's visit to Kyiv?
You know, I would be surprised if he doesn't, but, you know, he may just want to make this a story that, you know, isn't really about, you know, personalities in the West and so on, that he wants to just sort of stick with his narrative, but we'll see.
OK, Mark Champion, thank you very much indeed. Bloomberg's Mark Champion, of course, on the analysis of this speech that continues. The Russian president continued to speak. We'll dip back into that in the minutes ahead. You can keep following President Putin's speech on Live Go, on the terminal, pledging the Russian president to continue this conflict in Ukraine. Stay with us. This is Bloomberg.
Political, military and economic sense. For decades, they were destroying Ukrainian
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Now, UK Prime Minister Rishi Sunak has been meeting MPs from his Conservative Party to win support for a post-Brexit trade deal on Northern Ireland. The outreach effort comes after months of negotiations with the European Union. Joining us now is Adam Blenford, Bloomberg Senior Editor. Adam, what do we know about the behind-the-scenes talks? How much progress has been made? Are we going to get a deal this week?
Morning, Tom. Lots of questions there.
Yeah.
The chances of a deal this week are looking a little slimmer than they were perhaps at the end of last week. Last week there was, shutter diplomacy, Sunak flying into Belfast, talking with parties over there. This week the focus seems to be, in the early part of the week, on his own party in Westminster, trying to do a bit of arm twisting yesterday with those Brexiteer MPs who have always sort of sided with the Unionists and resisted the Northern Ireland Protocol, which you remember was an issue a few years ago. This morning there's a cabinet meeting. Obviously, Home Secretary Suella Braverman, a veteran of the ERG, that hardline Eurosceptic group within the Tory party, she's got a voice there and is said to be unhappy with the shape of a potential deal. And then later on this afternoon, James Cleverly, the Foreign Secretary, who's been in the negotiations with the Northern Ireland Secretary, he's talking to rank and file backbenchers. So you've got a sort of triple action operation to try and win over. That's just the Conservative MPs.
Yeah, we haven't even gone to the Unionists.
And, last week there was a bit of outreach to the Unionists, but yesterday one of their leader, their chief whip in Westminster, said there's a very long way to go and he couldn't see themselves signing up. So it's looking really complicated, even though all the desire and a lot of the messaging and mood music was that this was going to happen about now. So, it looks like something's been blown slightly off course, and Sunak has got to try and bring it back.
Right, really, really important for a Prime Minister who's trying to improve those ties with the European Union, even if he himself voted for Brexit initially. Adam Blenford, thank you for getting us up to speed on that potential deal. Coming up as the Russian president addresses the nation 1 year after that invasion, what do the coming months hold for Ukraine? We will bring you that analysis with S&P Global, the geopolitics front and centre. Stay with us. This is Bloomberg. Welcome back. Credit Suisse shares falling to an intraday record low after Reuters reports Switzerland's financial regulator is reviewing comments made by Chairman Axel Lehmann to Bloomberg in December when he said outflows had stabilised. President Vladimir Putin issues a defiant message on his war in Ukraine, vowing to continue the invasion until Russia has achieved its goals. Also on the show,
What I'm really pleased of 3 years later is a radical change in the profit generation by geography. The Middle East alone last year generated 1.8 billion of adjusted pre-tax profits. Our troubled market in Europe 3 years ago produced an adjusted pre-tax profit of $2 billion.
HSBC considers a special payout after pre-tax profit jumps 92% in the fourth quarter. The bank also cut its bonus pool. Shares in London drop. Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London. The key corporate story of the moment, once again back in the headlines, is Credit Suisse. Shares, as we mentioned in the headlines, slumping to an intraday record low. You're now seeing losses of 4.6%, trading at 2.64 Swiss francs. Again, that's after Reuters reported that Switzerland's financial regulator is reviewing comments that Credit Suisse chairman Axel Lehmann made about outflows in an interview with Bloomberg in December. Here's what he said at the time.
The outflows basically have stopped. What we saw is 2-3 weeks in October, boom. And since then, flattening out, they have stopped. It's gradually coming back, in particular in Switzerland.
Credit Suisse and the regulator declined to comment on these reports. We will bring you more on that story as soon as we have it. We are getting data across from the Eurozone, but also here in the UK as well. A redhead across the terminal. February services PMI rising pretty robustly to 53.3. The forecast was for 49.2. So UK February services PMI firmly in expansionary territory, 53.3. Manufacturing PMI actually coming in above the forecasts, 49.2. Still in contractionary territory by a slim margin. The forecast was 47.5, but manufacturing actually improving here in the UK. For the month of February, at least, according to these PMIs, 49.2, still in contractionary territory, but better than the forecasts. Services coming in strongly, 53.3. We're looking at the pound. Let me just check in on the pound on the back of this data. Currently 120, a little bit of a move higher for the pound, 120. And of course, how this plays in to the decision-making of the Bank of England come March. And that next decision, of course, will be crucial. A debate as whether they hike again or pause, given what is happening in this economy. 120, just turning up now for the pound on the back of this data. A little bit of a gain for the British currency. Right, let's get back down to what is happening with Russia and Ukraine. The Russian President, Vladimir Putin, has kicked off a speech to the Federal Assembly just days before the country marks 1 year since it invaded Ukraine. It comes as President Biden pledged more military aid to Ukraine during yesterday's unannounced visit to Kyiv. The US president also promised further sanctions on people and companies assisting the Russian war effort. We are now joined by S&P Global Head of Geopolitical Thought Leadership, Lindsay Newman. Lindsay, good morning. Thank you for joining us. Let's get your take then on what we've been hearing so far from the Russian president committing, it's not surprising, to continuing this war in Ukraine. Where do you think he goes from here?
Thanks, Tom, again for having me on. Through its invasion of Ukraine a year ago, Russia has really written a smaller role for itself in the global economy, and Putin knows this. These are going to be lasting trends. If we look at the data, Russia's economy contracted in 2022. We forecast in market intelligence that it's going to contract again in 2023. Revenue's down, trade in good and services is down, but inflation is up, and the fiscal deficit is up. And this is all based on Russia's own data. So Putin is telling a story today of a conflict that he remains very committed to.
He remains committed, and on the ground, in terms of the military action, there is speculation around a spring offensive, some saying that may already have started. What do we know about the military conflict unfolding in the Donbass region and in Ukraine more broadly?
You're absolutely correct. Question is whether that counteroffensive has already begun in the east, in Donbass. If not, it will certainly begin imminently, and we're expecting Ukraine to really focus its efforts. While it wants to continue to focus in both the south and the east, it's going to need to counter that counteroffensive from Russia in the east. And a key question for Ukraine is whether they're going to continue to secure that support, the military assets, the supplies that they're asking for, this escalatory list of supplies that they're asking for, which is why, in part, Biden was in Kiev yesterday and will continue to present a message of unity today when he speaks in Poland.
Yeah, talk to us about that visit then, the surprise, the unannounced visit to Kyiv. Was it more than just a photo op, Lindsay? Is it more than just a morale boost for the Ukrainians?
we have to remember when Russia invaded Ukraine on 24th Feb last year, the transatlantic relationship was really in an uncertain place. You know, it was just the turn of the decade when we were hearing about NATO's brain death, when we had successive U.S. administrations calling on Europe to pay its dues, to support its collective defense. And a key trend from the last year, which, as Putin has said today, is that was perhaps underappreciated, was the unity that we saw both within Europe and between the US and Europe. And the key question as we look to the second year is, will that unity continue? And Biden brought a message yesterday of saying that U.S. is in it for as long as it takes. That's how he wrapped up his remarks yesterday. The U.S. is committed to Ukraine for as long as it takes, announcing an additional $500 million in military aid and previewing potential additional sanctions on individuals and entities seen as enabling Russia to evade sanctions. We expect more similar rhetoric today in the announcement today, but we have to be aware that there are countercurrents, right? We have a U.S. domestic audience watching this closely. There is indication from some polling that the commitment to Ukraine is perhaps slipping off of those peak numbers from a year ago. We have a new Congress in the U.S. We have a debt ceiling concern, not our baseline scenario, but these are all factors that are at play. And Biden wanted to bring a clear message of unity yesterday, and he'll continue that today.
Is that so? So on that point around unity, the coalition that's been formed to counter Russia, where are you looking for potential frays, for potential cracks in that unity? Is it the domestic politics of the US? Is that what is most vulnerable at this point?
There is a vulnerability there. There seems to be bipartisan support remaining quite strong, but on both sides of the aisles, it's sort of there are pockets of questioning around. We've seen around whether there should be a blank check. There's certainly questions about the type of military assets that are going to be available for Ukraine. President Zelensky asking for fighter jets and for long-range missiles. The U.S. has thus far been quite hesitant to provide that to that theater because of the potential knock-on implications. But this issue of unity really on the sort of U.S. and Western European side has been quite robust. Interesting to watch what we're seeing elsewhere, and Putin sort of egging it on today with his comments about the global South. The world that we're living in, the way that we're seeing it is fluid and flexible, in which countries are cooperating across certain spheres and competing elsewhere across other spheres. It's really a pragmatic approach. So that opens the door for sort of both sides of interaction.
Yeah. Lindsay, what is the US response if China does supply weapons to Russia?
The question here is, as I was just saying earlier, is how does the U.S. respond to any country pursuing additional sort of overt support for Russia? And what that ties into is how we're seeing now this accelerating interplay between economic and security spheres. In some ways, we're watching a new war, a new form of conflict unfold before us. It's a social media exposed conflict, but it's also, if we think about how the U.S. is really leading on the global security side of it, this is not a boots on the ground conflict that the U.S. is engaged with. It's a dual strategy of providing massive aid and military resources while also leveraging economic tools like sanctions. So we can certainly expect to see, and as I said already, Biden is expected to announce additional sanctions just this week. And that, those economic tools of national security, those economic tools of statecraft is really where we should be falling.
OK, so we'll be watching to see whether or not those economic tools are used against China, if indeed they do start supplying weapons, and it's still a big if, to Russia. Lindsay Newman, smart analysis. Thank you. S&P Global Head of Geopolitical Thought Leadership. Thank you for joining us. Now, Russian exports of discounted crude and fuel oil to China, staying on that story, have jumped to record levels. That's as the reopening of the world's biggest energy importer gathers pace after the dismantling of COVID-0. While benchmark Brent futures are lower year to date, driven by concerns about tighter US monetary policy. There is that pull and tug between the two factors. Joining us now is Bloomberg Senior Executive Editor for Energy and Commodities, Will Kennedy. Will, is this latest data on Russian flows to Asia the marker of an inflection point or something of a one-off?
I doubt that it's a one-off. I think it points to a broader trend, which you alluded to in your words there, which is that China is clearly opening up. I think people are starting to see signs that demand for commodities in general, and oil in particular, is recovering fast, that the economy will suck up more crude and need more fuel. And clearly it's sourcing a lot of its crude from China, and there's been this great reordering in the global energy system, which has seen Russian oil that previously went to European refineries go to India and China in particular. And I think that's a trend we will see. Whether it will continue to grow, I think perhaps is open to debate, because Russia has said that oil production will fall by 500,000 barrels a day. But Chinese demand for Russian oil, China using Russian oil in its refineries in a way that it didn't previously, I think is a new fact to the global oil market.
To what extent does China offset the damage from sanctions then? Have we seen a material impact from sanctions, and will it change?
For Russia, the impact has actually not been huge on the oil industry so far. One of the surprising things about the last year since the war started is I think that people felt that sanctions could have an impact on oil production. One, because Europe would not be buying as much oil, and two, because some of the sanctions on imports might affect the ability of the industry to keep going. Neither of those things have actually happened. As we said, Russian crude has largely been diverted to buyers in Asia, and the industry has done a fantastic job of keeping going. They've drilled, we reported last week, as much as they ever have, and production was pretty close to all-time highs for a lot of last year. Now, that's going to fall by 500,000 barrels a day, the Russians say. There's some debate about whether that's a voluntary choice or an admission that they can't keep going at the same pace. But I think people have been surprised by how resilient the Russian oil industry has been.
All of that then tying into future prices, and I'm not going to press you to give us a forecast on pricing, but Goldman Sachs, Jeff Currie coming out and just reiterating his bullish call on commodities and energy. They've set themselves a forecast of plus $100 by the end of the second half of this year. Is that becoming more consensus?
There's definitely an idea out there that the oil market should tighten in the second half of 23. You put together the fact that OPEC has said that it's not going to increase production this year, that Russian production is going to fall a little bit, that shale continues to disappoint on its production growth. And you've got a pretty muted supply picture against a pretty strong demand picture, which may get significantly stronger as the Chinese economy reopens and grows and people start flying again. You talked about the Fed. Clearly, they're grappling with an economy that is stronger than some people expected. So that picture is definitely there for a lot of analysts, that you're going to see demand outstrip supply in the second half, and that could be constructive for prices. OK, $83 a barrel on Brent, $76 a barrel on WTI, just 0.1% lower for WTI in the session today. Bloomberg's Senior Executive Editor for Energy and Commodities, Will Kennedy, thank you for the latest. Now, coming up, Credit Suisse shares hit a record low on a Reuters report of a probe into claims the lender's chairman made about outflows to Bloomberg. We've got the details next. This is Bloomberg. Welcome back. Another grim day for Credit Suisse. Shares slumping to an intraday record low. That's after Reuters reported that Switzerland's financial regulator is reviewing comments Credit Suisse's chairman, Axel Lehmann, made about outflows in an interview with Bloomberg in December. Here's what he said at the time.
The outflows basically have stopped. What we saw is 2-3 weeks in October, boom. And since then, flattening out, they have stopped. It's gradually coming back, in particular in Switzerland.
Outflows basically have stopped. That's the key line from that interview in December between the chairman of Credit Suisse and Bloomberg's Francine Lacqua. Credit Suisse and the regulator, FINMA, declined to comment. We will bring you more on that story, of course, as soon as we have it. In terms of the market reaction, though, let's bring in our equities reporter, Joe Easton. And Joe, I was talking about the fact that you have to really give up on the number of days where this stock has taken a hit and how brutal it's been over the last 12 to 24 months for Credit Suisse, and another severe leg lower for this stock.
That's right. It's been pretty rough, as you say. I mean, if you think about back to a year ago, it was trading at around $10 when you convert it from the Swiss francs. It's now down to around 2. Intraday record lows we had on the screen
on a dollar basis.
In a year on a dollar basis, which is pretty disastrous, really. And it kind of makes sense given that obviously the outflows from the wealth management division, but then this report is pretty damaging given that there was a capital raise after those comments. So the reason you would buy into that capital raise is potentially because you believe the wealth management outflows are going to stop. And if that hasn't been the case, then you'd question why were they buying into that capital raise, and now they're facing more losses from the stock hitting an intraday low. So it's pretty bad.
And it was a successful capital raise. And again, to stress, we're still waiting for comments from the regulators over in Switzerland, but also Credit Suisse as well. And this is a report by Reuters, so we're waiting for more details. 263 now in terms of Swiss francs for Credit Suisse. How do you think investors, I mean, to your point, to draw it out a little bit more, Joe, how do you think investors are weighing this all up at this point?
Well, I think that, just to kind of reiterate, I do think that the main concern was always the wealth management outflows. The restructuring, you know, away from the investment bank gave a kind of reason to buy into that story and say, we're going to refocus on the wealth management area, trim down some of the investment bank, narrow those divisions down. But if, you know, they haven't got a clear picture on the flows, then what are they investing in? How can you even give the stock a price target if you don't know where that money is going?
Does history tell us how these regulatory probes unfold in Switzerland? Do we have a steer on what they're going to be looking at specifically and how this may play out in the days and weeks ahead?
Well, I think that, as you mentioned, we have to wait and see how clear they are, the regulators, and how they take this. But I think that if obviously want to be careful on not speculating, but you have to consider how the management composition will look within the next 2 or 3 months, even 6 months, if this progresses. Is there a question over company direction? But again, it's a bit too early to speculate on that. I have to see what the regulators do. But the main concern, one of the other concerns, would be how the board looks 6 months from now, I would say.
Joe Easton, on the market reaction to this story, the reporting again from Reuters that regulators are probing some of those comments from the chairman of Credit Suisse made back in December to Bloomberg on outflows. And that stock currently down 5% on Credit Suisse. OK, coming up, HSBC's UK shares trade lower, but CEO Noel Quinn tells Bloomberg he is upbeat on the bank's global business. It was a beat on the earnings. More from that interview next. This is Bloomberg.
Kyiv stands, and Ukraine stands. Democracy stands. The Americans stand with you, and the world stands with you.
I think we're at an inflection point. We have a moment. And for everyone who says we want Ukraine to win and Russia must fail, if you believe that, then act now.
A lot of risk, and the message is don't doubt our commitment to the people of Ukraine.
This is Bloomberg Surveillance, early edition, with Anna Edwards and Matt Miller.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. President Biden's in Poland, where he hopes to rally new support for Ukraine's fight against Russia. Vladimir Putin delivers his first State of the Nation address in almost 2 years. The Russian leader issuing a defiant message, vowing to continue the invasion until Moscow has achieved its goals. And HSBC says it may pay a special dividend following a sale of its Canadian unit. The bank's fourth quarter earnings almost doubled. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. And Matt, plenty of geopolitics to go around today. We also have a lot of earnings stories to talk about here in Europe and data. We've had PMIs out of Europe, PMIs out of the US a little bit later on today.
Yeah, there's a lot going on again to kick off what is for us here in America a shortened week. Market's not exactly sure that they like what's going on. You can see that S&P futures down more than 0.5% right now. And at the same time, though, investors are selling 10-year debt. That means that the yield rises 386.70. That's getting near the top of its range, back again to the top of its range for the session. We had seen it come down a little bit earlier. But as the yield climbs, that offers more competition to the S&P yield. And as a result, it puts a bigger headwind on stocks. NYMEX crude is up, but still only at $76.66 a barrel. So a relatively low level there. At least we're not at 80 on NYMEX, and Brent isn't also higher. We have seen earlier in the session the oils trading down, although all of the other commodities, copper, iron ore, corn, all soybeans, all rising. So now oil has turned around and is rising with the rest of the commodities complex. Bitcoin also barely budging right now, but just shy of $25,000 once again after a strong weekend. So 24,787 shows that Bitcoin continues to rise. In terms of Asia, there's not a heck of a lot to look at, although we did have a pretty big drop on the Hang Seng. You can see the Hang Seng here, down 1.7%. That's worse than many of the other indexes in the region. The MSCI Asia Pacific, the broader index, down but just about 0.8%, and the Nikkei down far less at the close, just 0.2%. I will point out that the U.S. dollar now buys 134 yen, so climbing in strength against the Japanese currency. We'll continue to keep our eyes out for action at the BOJ. Anna, what do you see in terms of Europe?
Yeah, in Europe then, Matt, we see weakness across European equity markets today. Down 0.2% in London, a little bit more than that, 0.4% down on the DAX and the CAC. So some weakness, and most sectors are actually in negative territory. Only some very defensive sectors seem to be doing better today. The likes of healthcare, for example, that's one of the sectors that hasn't been doing too badly. In terms of where we are on the individual stocks, though, BHP is worth a mention. This on the earnings story. We've got the BHP share price here in London down by 2.7%. The company reporting revenues that dropped. Dividends also being cut. China remains a focus for the recovery part of the story over at BHP, the big miner, global mining business, of course. Engie, a different story there, but again about dividends. This is a business operating in the energy space in France that is able to make good profits at the moment. And so profits jumping and dividends going higher, and that stock up by more than 4%. And here we get to some really interesting response then, Matt, to the data coming out of Europe. We've seen disappointing data from Germany on the manufacturing side, and that seems to be the thing that's caught the imagination of those trading on this European data set. We also just got the ZEW numbers coming through from France. That, on the other hand, paints a slightly better picture, telling us the story that we already know, perhaps, which is around recovery in expectations on the German economy, rising to 28.1. The estimate was for 23. So that's the ZEW part of it. But the market focused on the disappointing manufacturing data in Germany, perhaps, and the euro goes a little bit lower. The pound, on the other hand, up by 0.3%. We're also seeing repricing in gilt markets after we got a composite PMI figure that surprisingly showed expansion in the UK economy. It came in at 53. It was the services side that was much better than had been anticipated in the UK. Does that mean then, Matt, that the Bank of England has to hike more times than had been anticipated? The market seems to be asking that question right now.
All right, similar questions across, I think, Western markets in terms of what's the central bank going to do. Let's get, though, back to geopolitics right now, because Russian President Vladimir Putin has been defiant in his first State of the Nation speech in nearly 2 years, reiterating that Moscow would continue to fight for its historic lands, his words, in Ukraine. Joining us now is Mark Champion, Bloomberg senior reporter for international affairs. So, Mark, what do we hear from Vladimir Putin? Is this the annual speech that can go on for hours and hours?
Well, you know, it's already gone on for an hour, but I mean, I think there are a few messages in there. It's very clear, actually. You know, the first one is we are gearing up for a long war. We will do what it takes. He talked about restructuring the economy. He talked about restructuring logistics to turn them east. He talked about also setting up institutions internally to deal with veterans, with the families of the fallen. And he was basically telling Russians that this is a good thing, that the economy is actually doing something healthy, something we should have done a long time ago. It's becoming more self-reliant, more resilient. There will be growth, there will be jobs. And so that was his message for home. Outside, he was really addressing the global south, if you like, and he was basically saying the West is full of hypocrisy. This is not our war. They forced it upon us. And when they say they want to give you aid, they're only giving you $60 billion, whereas they're spending $150 billion on the war, and that's all you need to know.
Okay, yeah, really interesting then. So they're in it for the long haul, seems to be one of the key messages, as you say, and self-reliance, the silver lining, I suppose, if you're cut off from certain other economies around the world. Mark, let me ask you also about what's happening with China and China's role here in this conflict in Ukraine, because Beijing seems to be looking to broker some sort of peace agreement here. A delegation, we understand, from China heading to Russia to present some ideas around that. What more do we know on this?
Well, we don't know a great deal, but it is, that is potentially really important. What China does, what it chooses to do is critical. The U.S., China denies it, but the U.S. has said that they understand that the Chinese are considering arming Russia, which would be a real kind of carrot and stick where you provide a peace deal, which it's highly unlikely is one that Ukraine or the West could accept. And on the other hand, your implicit threat is that if you don't accept this, we will arm Russia and this war will become unwinnable.
Mark, thank you. Thanks very much for the analysis. Bloomberg's Mark Champion. We'll keep across, of course, all the news lines coming through from Russia as Putin continues to deliver that State of the Nation address. Now, President Biden is seeking dividends from his surprise trip to Ukraine. The president is hoping to rally new support for the Ukrainian efforts against Russia as he meets with Eastern European leaders in Poland. The U.S. ambassador to Poland spoke with Bloomberg's Anne-Marie Hordern on the symbolism of Biden's trip to Kyiv.
President Joe Biden quite bravely took a trip to Kiev, a lot of risk, and the message is don't doubt our commitment to the people of Ukraine.
Anne-Marie Hordern, Bloomberg's Washington correspondent, joins us now from Warsaw in Poland. Anne-Marie, so you holding those conversations yesterday. Yesterday we talked about President Biden's trip to Ukraine and what that meant. What is he hoping to get out of this dialogue today then as he's in Poland?
Well, on the heels of President Putin speaking in Moscow, you're going to see really split screen, a big version of a split screen between a war of words, really, between what President Putin is outlining and what President Biden is going to outline in just over 6 hours here in Warsaw, about 800 miles away from Moscow. He's going to be talking about this idea of democracies versus autocracies and how he sees that democracies are the ones that are going to outlast in this world order. And he's going to talk about what he talked about yesterday in central Kiev as he walked in that central square next to President Zelensky, this with unwavering support that the United States has for Kiev. And it comes at a time that there is this concern about fatigue setting in amongst the Western alliance. We are about to approach that 12-month mark of this war, and many leaders are setting in for a prolonged war. And Biden is here to say we will stay with Ukraine until the very end. And that's really a show of support as well for the allies to make sure they continue to send support as well.
What do we know about the Chinese, though, AMH? Because it looks like they're considering arming Russia. We know the Chinese are meeting with the Russians at the same time as these meetings are happening in Poland. How does that figure into the equation?
Yeah, China's State Councilor Wang Yi, he met with Secretary Blinken over the weekend at the Munich Security Council, and now he's in Moscow. And he's likely going to be meeting with President Putin as President Putin, after he wraps up this speech, a very long one indeed. What China really is doing is, on the surface and in public, they are talking about the fact that they want to outline this peace plan. But behind the scenes, what you hear from U.S. officials is the fact that what they are doing is actually still continuing to aid Russia. And what Secretary of State Antony Blinken told CBS over the weekend is that they are seeing potentially these concerns of lethal military aid to Russia. So the United States is going to be, at this time when there's also a lot of acrimony between Beijing and Washington after the alleged Chinese spy balloon, they are going to be dealing with this potentially China that says one thing but does another.
Anne-Marie, thanks very much. Bloomberg's Anne-Marie Hordern reporting there from Warsaw in Poland. Now back to the corporate earnings stories. HSBC is considering a special payout and new dividend issuance after the sale of assets in Canada and in China. With fourth quarter earnings beating analyst estimates, the CEO, Noel Quinn, spoke exclusively to Bloomberg's Manus Cranny earlier.
What I'm really pleased of 3 years later is a radical change in the profit generation by geography. The Middle East alone last year generated 1.8 billion of adjusted pre-tax profits. Our troubled market in Europe 3 years ago produced an adjusted pre-tax profit of $2 billion.
Joining us now, Bloomberg's finance reporter Tom Metcalf. And something about this earnings story seems to be slowly dawning then, Tom, on investors, because the stock was trading down considerably weaker in London earlier, now up by 1.9%. I guess the focus now is on the return of cash to shareholders.
Yeah, exactly. Look, it was a decent set of results, and I think initially investors were a little bit sort of wary of the outlook, which, you could read as being pretty cautious. But we've got a few calls going on now. Analysts have just come off a call with Quinn and his CFO, and I think that kind of reassured the market. And you've seen that shares jump on, a strong profit beat in the fourth quarter, and generally saying, look, we're happy with how things are going, and sort of things seem to be running quite well over there.
Credit Suisse shares have slumped to another intraday record low. That's after Reuters reported that Switzerland's financial regulator is reviewing comments that Chairman Axel Lehmann made about outflows in an interview with us back in December. Here's what he said then.
The outflows basically have stopped. What we saw is 2-3 weeks in October, boom. And since then, flattening out, they have stopped. It's gradually coming back, in particular in Switzerland.
So what do we know? What more do we know now about this probe, Tom?
Yeah, it's early days. I mean, basically, Reuters were reporting that FINRA, the Swiss regulator, is effectively looking at those comments we've just heard. And the nub of the issue appears to be effectively some months after he made those comments, those outflows did continue. And of course, in between that period, Credit Suisse was out there raising money. So very early days, not clear yet whether this will be a formal probe. It's just questions. But obviously, Credit Suisse investors not liking the look of it.
All right, Tom, thanks very much. Bloomberg's Tom Metcalf talking to us about the banking news at HSBC as well as Credit Suisse. Watch those shares in markets today. In terms of what we're watching in the pre-markets, Stellantis is one of the stocks that could move. It's going to issue its earnings report tomorrow morning in Europe. So by the time many of you wake up, of course, Anna, you'll already be well awake, we could see these shares moving in the pre-market here as well as moving on the continent. Meta, Facebook, is another stock that could put up some big moves today. In the pre-market, it's up 2.25% after Mark Zuckerberg said the company would get even leaner, really focusing on keeping a lid on costs, boosting profit. The profitability portion of Facebook's lifetime is now in session, and as a result, maybe we'll see moves that compete with the 20% move we saw a couple of weeks ago. Maybe not that high. Nonetheless, Manchester United, also, I guess, a stock. Is this a U.S. quote? Does it trade here? Or is it?
It does.
All right. So it's up 2.4% here on the possibility, of course, of a buyout. We've been talking about who could take over Man U from the kingdom or possibly somewhere else if they get another bidder. As a result, 26.96. Is this based in the U.S.? Do we have a soccer team?
It listed in the U.S.
Trading in America?
It did. It listed in the U.S., which is sometimes why we find it hard to find a home for the story. But absolutely, it deserves its place in pre-market movers, Matt, because it is U.S. traded, which means the story we covered yesterday, which was all about Jim Ratcliffe's bid, a UK domestic billionaire, the owner of Ineos, of course, and the Qataris bidding, all of that. We haven't seen any movement on that story because U.S. markets were closed yesterday, so we'll look for that today.
And Jim Ratcliffe, also maker of the Grenadier, which is an incredibly exciting Land Rover Defender-esque car. He came up with the idea in that pub in Belgravia.
Big fan of football, apparently, of the
who
isn't? Variety. Right. Yeah. Coming up, Pooja Kumra joins us, senior European and UK strategist at Toronto Dominion Bank. We'll talk about rates. How has her thinking been changed, if at all, by the PMI data we've had out of Europe today? Quite a lot to think about there. And as we approach 1 year of war in Ukraine, we will speak with PGIM's fixed income lead emerging markets economist Magdalena. That conversation shortly. Plus, cracks in the US war machine, perhaps. Today's Big Take story takes a look at America's military-industrial complex and why it may be misfiring. Look for that online or on the Bloomberg terminal. This is Bloomberg.
Welcome back to Bloomberg Surveillance, the early edition. I'm Matt Miller here in New York. Anna Edwards with us out of London. We're looking at an incredibly small premium in terms of the earnings yield on the S&P over U.S. debt. In this case, we use the 10-year yield, and it's only 1.26% away. But if you look at the 6-month yield in terms of T-bills, it's almost exactly the same as the S&P 500 earnings premium. So taking away that advantage that stocks may have over bonds. Joining us right now to talk a little bit more about this is Sagarika Jaisinghani, a Bloomberg equities reporter. So Sagarika, do we see less interest in stocks as yields climb ever higher?
Hi, Matt. Definitely. I think the mood on Wall Street has definitely soured, particularly since the hot inflation reports that we saw last week. And, you know, that's the big debate that's sort of brewing in stock markets since last week, which is how do you navigate this so-called no landing scenario, right, where you've got evidence that the U.S. economy remains resilient. At the same time, we've heard from several Fed policymakers that they see the need for interest rates to keep rising at the moment as inflationary pressures remain. And we've had a chorus of sort of strategists, most notably Michael Wilson at Morgan Stanley came out today and addressing, you know, the equity risk premium. He said it's actually the lowest now since 2007, which is definitely dulling the prospect of the rally continuing.
Okay, and let me ask you more about that no landing scenario, because it's a really fascinating one. On the one hand, you could see that as really risk off, because if there's no landing, inflation stays high and rates have to go higher. But markets don't seem to be interpreting it that way in the short term. They're managing to find some upside, some positivity in a no landing narrative.
Yeah, absolutely. And that's where the warning comes in. We've heard from several other strategists as well, both, JP Morgan's Mislav Mateshka came out and said that yesterday, that that bets on that sort of economic resilience as well as an imminent Fed pivot are still premature. So on the other hand, though, they don't see, the others aren't as pessimistic as Michael Wilson has been. He's calling for a 26% drop in the S&P 500 in a matter of months. The others are sort of saying that equity allocation, while it has picked up since last year, which was at a record low, it still remains below sort of the historical averages that we have seen. So they don't see immediate selling pressure on stocks, but they do see the rally fizzling out.
Sagarika, thank you very much. Thanks for joining us. Sagarika Jaisinghani with the latest on markets. And for more market analysis, check out MLIV Go. That's the function to use on your Bloomberg terminal. For the Markets Live blog, this is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. In Turkey, a pair of earthquakes rocked a southeastern province 2 weeks after major quakes in the same area killed more than 40,000 people. Monday's quakes killed at least 3 people and injured more than 200 others. Turkey's government has announced that it will start building about 200,000 homes in the hardest hit areas. China is urging the world to stop saying that Taiwan is next after Ukraine. Foreign Minister Qin Gang says that certain countries should stop fueling the fire by blaming China and saying, quote, Ukraine today, Taiwan tomorrow. Beijing has been trying to distance itself from Russia and portray itself as a neutral force for peace. Results are in from the largest ever trial of the 4-day work week. It found that most British companies taking part are not returning to the 5-day standard. The study involved 61 organizations, about 2,900 workers. Overall, businesses saw revenue gains, drops in turnover, and lower levels of worker burnout. And dear Lord, I hope that comes to us at some point, Anna.
Well, yeah, we wish you well with that one. We will talk about the markets when we come back. Pooja Kumra, Senior European and UK Strategist at Toronto Dominion Bank. That conversation shortly. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. President Biden's in Poland, where he hopes to rally new support for Ukraine's fight against Russia. Vladimir Putin delivers his first State of the Nation address in almost 2 years. The Russian leader issuing a defiant message, vowing to continue the invasion until Moscow has achieved its goals. And in corporate news, HSBC says it may pay a special dividend following the sale of its Canadian unit. The bank's fourth quarter earnings almost doubled. I'm Anna Edwards in London with Matt Miller in New York. And Matt, a lot going on in terms of the geopolitical stories that we're tracking in China, in Russia itself, in Ukraine, of course, and in Poland. So lots to talk about when it comes to geopolitics this week. A lot of data for the markets to digest, and something has clearly spooked equity markets.
Absolutely. And some big earnings, right? Don't forget we're going to get Walmart. So a huge read on the consumer today. Home Depot, I believe, coming out as well. So extra retail information coming out this morning before the bell. And that could be what has markets worried. Although you're right, obviously there's so much geopolitical information that it's difficult to get your head around. The S&P 500 futures continue to fall. So we're at session lows right now, down 0.7%. Meanwhile, the yield on the 10-year continues to rise. Now at its highest level, 388. I'm going to say that's the highest level we've seen all year long. So a 2023 high on the U.S. 10-year yield as we approach just the end of February, just 2 months in. NYMEX crude coming up now about 1% to over $77 a barrel. It's interesting, when I first looked at the commodities page today, GLCO, crude was one of the only commodities down, and we had everything else from metals to ags gaining. But now we're all on the same page, and everything in commodities is rising. Bitcoin, well, it's unchanged right now, but 24,757 puts it near as damn it to 25,000, and that's after just an incredible run this weekend. So Bitcoin, the rally continues to be powered. Take a look at some of the pre-market movers that we have today. Stellantis is obviously a gigantic conglomeration of automakers that includes Dodge and Chrysler, as well as Fiat and Peugeot. It's down 2.3% right now. It comes out with earnings tomorrow. I love to scream Stella randomly in the newsroom at any time because the ticker is STLA. Meta Platforms is up 2% right now. This is, of course, Facebook, and it had this incredible 20% move like 2.5 weeks ago. But that was based on cost cutting and a move into a profitability phase of its career. And Mark Zuckerberg has talked more about that this weekend. So maybe we could see more moves to the upside. Manchester United, I may have known before, but I'm learning again that it's listed in the U.S. It is, of course, a soccer team, but it could be a $6 billion soccer team. So everyone's interested, from is it the Kuwaitis or the Emirates?
Qataris.
The Qataris are interested, apparently, and they already own PSG. I'm learning more about soccer this week than I've known for a long time. But also the guy who owns Ineos and created the Grenadier Land Rover Defender-like car may be interested. I'm not 100% sure what's going to happen there. In any case, Man U is a very popular team. And then Walmart coming out with earnings today, as I said, as well as Home Depot. We're watching very closely to see how the U.S. consumer is doing, because he or she is such an important part, or they collectively, such an important part of the U.S. economy. So as goes Walmart, maybe so goes the market. Anna, what do you see in terms of Europe?
Yeah, that could be a really interesting take then on the US consumer. This is the European picture right now, down by 0.25% on the Stocks Europe 600. And most sectors have been in negative territory throughout the morning, only defensive ones really doing better today. BHP Group, this is one of the stocks that's actually doing pretty badly today, down by 2.7%. Of course, the giant mining business. Revenues seem to disappoint, dividends seem to disappoint. The future, of course, all to do with China and the reopening in China. They are hopeful that that will turn things around for the business. The euro, 106.56 right now, the pound 120.90. You see the euro going down and the pound going up, despite the fact that the overall composite PMI numbers for these two economies didn't look all that different. 52 in the case of the Eurozone, 53 in the case of the UK. But they mean very different things. The services sector doing so well in the UK is something that could really boost the UK economy. Therefore, how much higher will rates have to go in the UK? That's the calculation that the market is dealing with right now. Did we already know the positives around the European story? And there was some disappointment around German manufacturing. And so that weighs on the euro perhaps a little bit. So we see some contrasting moves for European currencies today. Let's get to the rate story, though. Pooja Kumra joins us, senior European and UK strategist at Toronto Dominion Bank. And Pooja, let me start with the German manufacturing story, the way that seems to have knocked the euro, perhaps changed your perspective a little bit on what the Eurozone economy can deliver or not. Give us your latest up-to-date thinking as to how weak things get or how resilient the Eurozone economy proves to be.
Thank you. So we in markets are continuously being informed as how stronger the economy is as what we all had expected, and also the kind of picture central banks had painted for us in the January and the last central bank meetings. So as something that you also mentioned, we are in the state where we don't talk about soft or hard landing, but we're talking about no landing. The economy has turned out to be much more resilient than we had expected. But I think one thing to note is that these are all sentiment indicators. And obviously things have improved remarkably from last year when we had upshoot in energy prices, financial conditions had really tightened, real yields were at their highest. And so this could be a relatively temporary phase. So I would be looking at another 1 or 2 months of data before to conclude that we are actually having no landing. Again, we're not looking for a hard recession, but the way central banks are hiking rates, it also suggests that at some point it will be hitting the consumer. But I think one thing is for sure that markets will be removing any rate cuts, at least that were being priced for this year. And that is something that is also being showing in the stock market performance, because at the start of the year, the stock market really rallied on expectations of significant cuts from central banks. And that's not the case right now.
Pooja, in terms of the no landing scenario, should we expect it to be exactly as the metaphor would imply? I mean, right now, the Fed is, putting on the brakes or letting off the gas. I guess it would be like this, right, in a plane. So do they kind of get close to the runway and decide no and put the gas back on? Is that how it would work? So cuts are expected in a no landing scenario?
I think right now they all want to be restrictive, as nothing has been as adverse as what they had expected. So yes, we are looking at meeting to meeting approach. We will be looking, later today, we will get US PMIs, which are also likely to show another rebound. We are going to get the PCE number this week as well, which is again going to be stronger than last month. So I think at this stage, they would actually, there's no doubt that they have reduced their pace of hikes. Central banks are no longer sprinting, but still they have a marathon to run, which means that hikes are likely to continue. We are looking for a terminal for US around 5.5%, which is almost in line with consensus. And I think at that stage, they would like to take a pause.
Little ahead of consensus, 5.5%. What does that mean for rates? I was just showing Pooja the U.S. 10-year at 388. It's the highest level, I believe, that we've seen so far this year. But, last year we were up at 424 and a quarter. Do we get back to that level on the 10-year? Could we eclipse it?
I think like we reacted a lot in January, markets right now also are reacting a lot with respect to the move in duration. So I think with treasuries, as they are inching closer to 4%, it's a good level to be long. In fact, we do like being long treasuries here. We do like being long treasuries, even versus bonds here, as ECB members are definitely sounding much more hawkish as compared to the Fed per se.
Can I ask you about the UK story, the gilt story then, Pooja? We're coming up to the start of a new financial year, a fiscal year here in the UK. When taking into account bond sales by the Bank of England, how do you think the gilt market will perform? I spoke to an analyst earlier who was saying that it is going to be that supply story that's quite relevant. How would you expect things to develop?
Yeah, no, it's a very good question. So far, whenever we are looking at all the QT sales, markets have actually absorbed it quite well. There's not much panic around that. But this is because we are basically end of the fiscal year. Supply pressures will start increasing, and the first bit of it will be announced on March 15th. Again, reduced energy prices does mean that the issuance needs for gilts will be much lower than what we were given in November. So we are anticipating around 50 billion less than what the Chancellor had suggested in November. But again, they are still very, very elevated. Total issuance in UK will be close to around 250 billion. This compares to the general average of 100 to 150 billion that we saw pre-2009.
And Pooja, has the PMI data out of the UK? I know that you said with the Eurozone figures we need a few more months of data to work out what this means. What about the UK? Because we've seen a big jump in the pound. We've seen the gilt markets responding to this very resilient services story for the UK.
Yes. Sorry, can I think I missed your question. The line was
apologies. I'm sorry. What do you make of the gilt market in the UK after seeing the PMI data that we got today? The services sector very strong.
Very strong. I think so far we said BOE as well as IMF, OECD, they have been most pessimistic about the UK growth story. And clearly, whatever data we have got so far, it means that UK will dodge a recession. And I think if that's the case, you will see UK gilts actually selling off much more than what we saw in other countries, just because the growth story is not as bad as that we thought it would be. So again, like I do expect gilts to trade around the current ranges, just given the fact that we do need more clarity, both from the Chancellor with respect to the budget, as well as from the BOE, that when does this hiking cycle end?
OK, we will look for clues then. Pooja, thank you very much. Thanks for joining us. Pooja Kumra of Toronto Dominion Bank. Coming up on this programme, as we approach 1 year of war in Ukraine, we will speak to PGIM Fixed Income's lead emerging market economist, Magdalena. That conversation coming up shortly. This is Bloomberg. This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, an interview with Walmart's CFO, John David Rainey. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards in London. Now, Russia's war against Ukraine has put added pressure on the energy sector, which was already struggling to recover from the COVID-19 pandemic. This invasion has led to a breakdown in supply, meaning the EU has had to start thinking of new ways to keep the heat on in the future. Joining us now is Will Kennedy, Bloomberg's senior executive editor for energy and commodities. And Will, we got through this winter. Thankfully, it was warm. I guess now, this year global warming was a blessing, not a curse. What are we looking for next?
As you say, if we think over the last year, Matt, it's a position that Europe would have been glad to take at moments last year. If we look back at August, where gas was more than 300 megawatts an hour, that's equivalent of over $400 a barrel if you convert it into oil. And today we're back at 50, still high by historical standards, but more than manageable. So that's where we are. I think most European policymakers would have taken that if you'd asked them 7 or 8 months ago. But we're not completely out of the woods. I think if you look at the supply and demand dynamics for liquefied natural gas, that's the gas that's cooled down to put on tankers. That's the gas that Europe's depended on this winter because it hasn't had Russian gas through pipelines. That market looks tight for the years ahead. And if global warming doesn't do its thing this winter, if we get a colder than usual winter, and as China's energy demand comes back, you could see a fresh crunch this year. It's too early to tell, but I think that people need to be looking at those two factors, the weather and China.
OK, the weather and China, crucial then to what happens with the European gas story and its readiness for next winter. Getting through the winter then here in Europe, Will, has meant reliance on LNG, as you point out, on wind, where the wind is blowing, but also perhaps reliance on some dirtier fuels. That takes me on to a headline across the Bloomberg now, which says that EU carbon, the price of it has hit a record €100 as industry is seen boosting energy use. Your thoughts on that kind of news flow?
Yeah, I mean, it's a big price. This is a market which has really changed over the last few years. Europe has put a lot of effort into making sure that the supply of those credits remains constrained because this is its main policy tool for encouraging people to use cleaner power and making coal use and gas use more expensive. I think the recent rally is actually about the optimism that lower energy prices will boost demand, will boost industry's use of energy, and that therefore people are going to need to go into the market and buy more credits. So in a sense, it's a story about European energy markets healing.
OK, Will, thanks very much. Bloomberg's Will Kennedy with the latest on energy markets. And joining us here on set in London, Magdalena Polan, lead emerging markets economist at PGIM Fixed Income. Magdalena, really nice to have you with us. So a year since, of course, the invasion of Ukraine, and energy markets have been on quite a journey. European economies have been on quite a journey since that point. When you look across Eastern European economies, those more emerging markets, are you surprised at where we've seen resilience and where we've seen vulnerability? What have been the standout performers to you?
We're not surprised by the resilience because these economies went into this conflict having incredibly strong economies, strong frameworks, strong growth, and that reliance also on the integrated European market. They also went with relatively okay fiscal positions, even despite COVID. So we're not surprised by the solid performance. Of course, that put a lot of pressure, though, because of the increase in inflation. You just talk about the energy market, and that hit absolutely everyone. And we have to remember that east of Europe, that weight of energy in the inflation basket and the role of energy in just the share of spending for people is higher than in the West. So that was definitely painful and added to that cost of living. But so far, I think that resilience and the success of the previous reform have proven to be very valuable.
Matt, jump in.
Magdalena, when you're building your models at PGIM or tweaking them, how do you factor in geopolitical headlines? We just got a big one across the Bloomberg terminal. Russia is going to suspend its participation in the New START treaty. We heard a little while ago from Putin that Russia will not allow NATO in to inspect its nuclear objects. And there's been talk about China possibly arming Russia in its fight against Ukraine. It seems to me the global peace is kind of breaking down. How does that factor in to the calculus of fixed income?
That fits into our calculus regardless of the country we're looking at. So this is so important for our medium and long-term outlook for not just the region, not just Europe, but the global economy. We see that we are in a world of a large geopolitical shift of increased risks, increased geopolitical risk, increased or decreased globalization, a much more acute need to manage cross-border risks. So that stability that we have experienced since the fall of communism is probably coming to the end. And that is, of course, could be more painful for the smaller emerging markets, given that they don't have the luxury of having large pools of domestic capitals, they don't have the luxury of having a reserve currency. But they would ride this boat together with the Western countries. Well, one thing that we look very carefully at is where they stand geopolitically. And the good relationship with the EU, good relationship with NATO will be for us one of those differentiating factors.
But it must be also very, or to some extent, inflationary, Magdalena. When we talk about deglobalization, it's just this big, broad concept. But when it comes down to reshoring or friendshoring or whatever you see a lot of these countries in the West doing, it really just means a higher push on prices, doesn't it?
Yes, it does. And it means the same for, for both the EMs and for the DMs, and especially now in Europe, because as we talk about the impact of the war in Ukraine on the energy market, this gave an additional impetus in Europe to shift to other energy sources. And with that effort now accelerated, this will add to the price pressures. But looking ahead, as we talk just about these changes in the geopolitical picture, that also affects exactly the view on long-term inflation trends and what it means to run monetary policy and stick to the inflation target right now.
Can I ask you, Magdalena, about the Russian economy? Because clearly the sanctions, we're watching still President Putin delivering his State of the Nation address. Clearly the sanctions environment that the West has introduced was designed to do damage to the Russian economy. And in some areas it might have succeeded. But in some areas, Russia has found new trade partners and has managed to keep up production of some commodities, for example. And the West's vulnerability to some of the things that Russia makes, like fertilizer, has been well demonstrated. Have you seen resilience or vulnerability in the Russian model?
I think we've seen both. So the Russian economy has been resilient in the past, given its large assets, its relative lack of openness. And we saw that also that the cleanup of the economy that the authorities introduced in the past definitely helped. But we can also see that Russia has to find new trade partners. And it may need to rely on partners like China too much for its own liking, becoming almost dependent on one key buyer of its oil and gas, which is not exactly a great outlook for the economy. Also, I think what you saw in it is also that as we come back to this big picture and the geopolitical changes, we can see that trade and finance is again becoming a part of international geopolitics. And Russia has used that for sure, but so did Europe with the impact on the energy market.
Magdalena, thank you very much. Thanks for joining us. Magdalena Polan of PGIM Fixed Income joining us with thoughts on emerging markets today. And just to mention that President Putin has just concluded his State of the Nation speech. You can see the wide shot of the room there and plenty of applause for him. Just to reiterate some of the headlines we got then coming through from that address, doubling down on the war in Ukraine, that will continue until Russia meets its objectives. That was our headline earlier on. And then just more recently, Russia won't allow NATO to inspect its nuclear objects. Russia won't be the first to resume testing of nuclear arms. Russia will test nuclear weapons if the US does it first, one of the lines here, and also says it will suspend participation in the New START treaty with the US. We'll continue to monitor what comes to us from Russia today. And you'll find more of that on LiveGo. This is Bloomberg.